how he makes 500K month selling insurance and how you can too. Question 1. Which of the following is considered an unfair trade practice? Rebating, networking, cold calling, referral gathering. Rebating is giving something of value to induce the purchase of a policy, which is illegal. Question 2. What is the primary fiduciary responsibility of an insurance producer? Maximizing agency profits, handling premiums and remitting them promptly, selling the most expensive policy, recruiting new agents. Producers act in a fiduciary capacity when handling client funds and premiums. Question 3. Which action constitutes defamation in the insurance industry? Offering a discount on premiums, making false statements about a competitor's financial condition, misrepresenting policy benefits, replacing an existing policy. Defamation is maliciously circulating false information about an insurer's financial condition. Question 4. What is a controlled business in insurance? Policies written primarily on the producer's own life or family, policies sold to a captive market, state-mandated insurance programs, a monopoly in a specific territory. Controlled business refers to insurance procured on the agent's own life, family, or employees. Question 5. When an agent replaces an existing policy, what must be provided to the applicant? A notice regarding replacement, a binder, a certificate of authority, a counter-signature. Most states require a notice regarding replacement to ensure the client understands the implications. Question 6. Which of the following describes twisting? Offering a premium return, misrepresenting a policy to induce replacement, combining two policies into one, charging a higher premium for identical risks. Twisting is a form of misrepresentation used to convince a client to drop their current policy and buy a new one. Question 7. To maintain an active license, what must a producer complete? Annual sales quotas, continuing education, CE, credits, a yearly written exam, a new background check. Producers must complete state-mandated CE to keep their license in good standing. Question 8. What is coercion in insurance sales? Using force or threats to sell a policy, providing a prospectus, explaining policy exclusions, following up with a prospect multiple times. Coercion is an unfair trade practice involving physical or mental force to induce a purchase. Question 9. Which of the following requires a producer to be registered with FINRA? Selling term life insurance, selling variable annuities, selling health insurance, selling whole life insurance. Variable products require a securities license, FINRA, in addition to a life insurance license. Question 10. True or false, a producer can share commissions with an unlicensed person? True, false. Commissions can only be shared with legally licensed producers in the same line of business. Question 11. What is the main purpose of the Do Not Call registry? To prevent insurers from calling current clients, to protect consumers from unsolicited telemarketing, to track agent sales, to block all commercial emails. The registry prohibits telemarketers from calling numbers listed, with exceptions for prior business relationships. Question 12. When an agent receives a premium check, it should be made payable to the agent, the agency, the insurance company, the State Department of Insurance. To avoid commingling of funds and maintain fiduciary duty, checks should be payable to the insurer. Question 13. An agent who guarantees dividends on a participating policy is guilty of misrepresentation, defamation, rebating, discrimination. Dividends are never guaranteed, stating otherwise is misrepresentation. Question 14. What does the Fair Credit Reporting Act, FCRA, require of producers? To perform a credit check on all applicants. To notify applicants if a credit report will be requested. To share credit scores with the insurer. To guarantee a policy regardless of credit. FCRA requires applicants be informed if an investigative consumer report may be ordered. Question 15. Which of the following best describes commingling? Selling life and health insurance together. Mixing personal funds with collected premiums. Working for multiple agencies. Combining policies for a discount. Commingling is the illegal act of an agent mixing personal funds with the insurer's or client's funds. Question 16. What happens if a producer's license is revoked in their home state? They can only sell in non-resident states. Their non-resident licenses are generally also revoked. They must retake the exam within 30 days. They are fined but can continue selling. Non-resident licenses are contingent upon the producer maintaining their resident license. Question 17. Which document gives a producer the authority to represent an insurer? Certificate of authority. Agent's contract/appointment. Binder. Broker's license. An appointment is the authorization from an insurer for a producer to act on its behalf. Question 18. True or false? Boycott is a legal practice to eliminate competition. True. False. Boycott, coercion, and intimidation are unfair trade practices meant to restrict fair trade. Question 19. A temporary producer license is typically valid for up to 30 days, 90 days, 180 days, 1 year. Temporary licenses are often issued for up to 180 days to surviving spouses or designees without an exam. Question 20. What does E&O insurance cover for an agent? Intentional fraud, failure to remit premiums, negligence and errors in professional services, loss of license. Errors and omissions. E&O insurance protects agents from liability for unintentional mistakes or negligence.